Hello everyone, this is Sitesh and welcome to my channel Option Intelligence. And those who have not yet subscribed to my channel, kindly please hit like and subscribe to get more informative videos on options trading. So today, as I told in my group, and also many of you requested to make a video to how we can obtain a iron fly crown strategy, crown payoff chart. Okay, and this is also quite trending in Twitter. So this you can see how payoff chart is appearing like crown shape, and the loss maximum loss is eliminated in this one. And so maximum with this position, the person can have max minimum profit of 6,735, and based on the Nifty expiry, the max profit can go up to 11,735, and this is only for one lot. I have shown this example. Okay, so now I will just start this from the beginning. Okay, so let's say we consider the expiry for the latest expiry of 10th of November, and I'm going to select. So last Nifty expiry was at around Nifty expiry. Sorry, Nifty closed around where it closed. Let me check. Okay, 18,200. Okay, so what we will do, we will take 18,200 straddle for expiry 10th of November. Okay, so I'm going to add sell position 1 CE. Okay, option strike price, this is missing 18,200. Just a minute. Okay, and Nifty we have selected. Okay, so those who are not aware, this is Opstra Define Edge website where we can build a strategy in this option strategy builder, and we can see our payoff chart, how it will perform, and what are our maximum profit and maximum risk it has. So, so no, as you can see, for a normal straddle without a hedge, your max profit it is coming around 8,000 rupees. Okay, and uh, since we have not bought any hedge position, any protection, so the loss is unlimited. As you can see, your max loss is undefined. So what this is basically termed as a short straddle. So what we do, we have to make it an iron fly when we buy. Uh, let's say we want to limit our losses if not more than a certain point. Like let's say we want that my loss do not exceed to more than if Nifty falls less than 18,000, so the loss would be around 2,600. So I do not want more than that loss in my strategy. So I'm going to buy a hedge for that. Okay. So I bought a PE option, 18,000. So my loss is limited to 26,300. If Nifty starts falling from opening tomorrow. So even if it falls 1,000 points, my loss will be limited since I have bought a hedge position of 18,000. Okay. Similarly, on the upside, we will buy 200 strike, 200 points away strike of 18,400 CE option. Okay. So upside also I have limited my loss maximum up to 3,500. So this strategy will not give more than loss of 3,500. Maximum loss it is carrying is minus 35,082 rupees for one lot. Okay. And probability of profit you can see And our best position is on Thursday if Nifty expires close to 18,200. So our maximum profit is 6,400. So here the reward is 12% and max loss is 7%. Okay. So now how we can achieve to a position where it goes up to crown, or we can limit our losses. So let's say tomorrow market opens flat around 18,200. Okay. And this values would must have decayed. Both of these options will decay by time. There would be some kind of a theta decay. So let's say this value would decay to 70 and this will decay to let's say 50. So you would be having some amount of profit in your total PNL. Okay, in this strategy. And of course, the hedges you would have bought, these two values would also decay by some extent. Let's say they would have fallen up to 10 rupees, 9 rupees it has lost, and this also would have lost at 9 rupees. So if I adjust it to more closer, okay, so what I will do, I will square off this two and I will buy more closer hedge position so that my max loss, this value will come down. Okay, so now I have to square off this one 18,000 CE. So let's say that hypothetically tomorrow morning the value of this option will be 10 rupees. Okay, so I have sold it. Okay, similarly 18,200 PE. This also, sorry, 18,000 PE. Okay, this would also come to 10 rupees. These are all estimated price I am putting, just considering that the market is opening flat. Okay, so add position. Okay. So now I have squared off these two. Now I am going to buy a closer strike. Let's say now I would buy a 10 rupees strike that would be around available around 18,300 and 18,050 PE. Okay, I will buy. So this value would be around, let's say 19 rupees. Okay, and the value would be around 18,350. Okay, this would be around, let's say, again 19 rupees. Okay, so now my max loss is limited to 1900. So I have brought down my loss to 1900. Okay, so again next day what happens again, market again opens flat around 18,200. So now again we will try to reduce our limited loss, max loss. Okay, still we are carrying this position. Okay, so again I will square of these two. Yes, I will go to sell, and let's say the value has been decayed to from 19 to 10 rupees. Okay, and again 18,050 put option which we have bought as a hedge, that also I will square off. Okay, okay, 10. Again it is back to simple RSI. Again I will buy a closer hedge. Let's say next day will be Thursday, so closer hedge will be available at 18,150. Okay, put option, and that value will be around, let's say, again 20 rupees. I have bought it. Similarly, I bought a 18,250 call option that would be available at 20. Okay, so this way you see. Now, since I have positions of 18,000, what are my active positions? These two, 18,000 C and PE sold, still carrying, and I have squared off 18,000 PE first, 18,400 CE. I have squared it off and then I took 18,050 CE and 18,350 CE. Again, I squared both of them, and again I took position of these two. Okay, this is on parity. So this is a hypothetical I'm explaining. So the main aim for this one is whenever you get profit, you just keep on rolling up your hedges, move closer to the straddle position. So by that way, you are slowly reducing your max loss. Okay, now at this point of time, you cannot lose money. Your minimum you would have a profit of 2,000 rupees per lot. This is a per lot strategy. Okay, and probability is 99.5% to be in profit, since in no way you can lose money in this. Okay, so this is the way we achieve a crown type of strategy. Okay, so this I have made it for three straddles. Okay, let's say market is at 18,200, and you take position of straddles at 18,100, 18,200, and 18,300 like this. Okay, so for three, if you keep on shifting your hedges, ultimately you will reach a position here. Okay, so basically this is what a crown strategy looks like. And since it was trending on Twitter, and many of Twitter traders were asking about it, that how they are achieving this no loss position. So let me tell you, there is no holy grail no loss strategy in stock market. Okay, this strategy can lose money only when at initial position you would have taken this position and you would have bought this hedge. Then market would have, let's say, it would have moved to 18,100, 18,000. If it would have moved to 18,000, then you would be having a loss of, as I was showing you earlier, it would have having a loss of 2,600 rupees. So main approach for this strategy, let me tell you, is like if market moves, let's say next morning to 18,100. Okay, here I have considered that market has opened flat all back to back tomorrow and day after tomorrow and today also. It was completely flat. But as you know, market is very less probability that it will stay flat throughout. So let's say tomorrow if it opens at 18,100. Okay. So in that position, we would be taking a straddle of 18,100, and again we have to take a stud hedge for that. Let's say I add 18,100 straddle. Okay, this is for tomorrow. Okay, this for one strategy, one straddle. This has achieved up to Thursday. So I am showing for another position for you for 18,100 straddle. Since market has opened tomorrow at 18,100. Okay, so I have sold 18,100 CE and 18,100 CE. Okay. So now I have to buy the hedge also for this. So I will be buying 18,000, uh, sorry, 17,950 hedge and 18,250 CE. Okay. So this is coming like this. Again, next day, let's say it opens again around 18,100. So what we will do, we will square off these two hedges, and again we will, this would be a hypothetical value tomorrow, day after tomorrow. So this value would be around, since it has fallen, this value would be more than that. What I am seeing here right now, this would be around, let's say, 20, and this would be little less. Let's say it is around 25. I think it would be around 20. Let's say 25. Okay, no issue. So again, next day it is opening around 18,100. Okay, this value will be also higher since it has fallen. It would be around, let's say, 100. Okay, and this will be also around 100. So let me repeat again. Market open at 18,100 next day. Both legs at spot price, it is around 100, 200, and 150 points away strike price values are around this one. Let me put it 20 to make it more clear. Okay. Okay. Again, so next day on expiry on Thursday after tomorrow, day after tomorrow, again we will square off these two hedges, and again we will bring it closer, like we have did it for 18,200. Okay. So now I will square it off. Okay. So this value, it must have decayed to, let's say, 10 rupees. So this is sold at 17,950 PE option. This value would be, there would be some decay, hardly any increase. So this value will be also around 10 rupees. So okay. Now again I will buy more closer strike option. So for 18,100. Okay. So how I will be buying 18,050 put option. That would be around 10 rupees, and 18,150 call option. That would be around 10 rupees. So as you can see, this is for two straddle. We have made a crown perfectly matching up to. So your max loss is plus 7,500, and max profit is. So in this, we have to wait for a position if market expires at 18,100 or 18,200. Wherever you find market closer at a certain point of time, you can completely square off all the positions, and you can book your profit close to at your maximum profit. So that's it, guys. This is for the crown strategy, which was so famous on Twitter, and many of my friends in the group who are using my algo strategy were asking about it. So I have tried to explain in a simple language for this one. And any of you want more videos from me in other, like if you want in Hindi also, I can try to put video in Hindi for more clear explanation. And other strategies also I can try to put. I've been doing algo trading in options. I've been trading for past 4 years, and my algo is working quite a lot. I mean, it is working good. Let's see how it performs further. And that's it. Kindly hit like and subscribe to my channel, and I will try to give more learning videos for you, all of you. Anyone interested with me, with my algo or anything, can DM me on Twitter, on my Twitter ID at the rate Vicky10817. My name is Hitesh Chaurasia, and I would be happy to give my strategy to you to deploy with your broker. Okay, that's it, guys. See you all. Take care. Bye.